and welcome to today's Five with Fitz. I'm Keith Fitz-Gerald, and I'm back after a fantastic week in Pensacola, Florida, where we watched with great pride as our daughter-in-law became one of the U.S. Navy's newest winged aviators. Anyway, let's talk markets. Let's get right to it. All three indices are down in early trading, which isn't a surprise in the least given everything that's going on right now. Tariff challenges, rising treasury rates, and rising bond yields, just to name a few of them. None of this is a surprise. September is almost always a tough month as traders rejigger to get ready for the final push into year end. It's the same every single year, year in, year out. People forget that. Now, if this makes you nervous, I get it. You're not alone. Here's the thing though. The news media doesn't help matters much because they want to sensationalize everything when the real answer is far more benign. Nothing happening today. I repeat, nothing obviates the business case for owning great companies. Take Apple, for example. Tim Cook has 2.2 billion installed devices out there. That is the largest installed premium hardware base in history, and it is all monetizable through services that now account for 25% of total sales and are growing faster than hardware, exactly as I told you would be the case in 2014 when I first identified this as a profit mechanism. Now, Wall Street and the media will never tell you that this makes Apple less cyclical than ever, nor will they tell you that Apple throws off more than $100 billion with a B dollars in free cash flow a year. It supports the world's largest buyback program and has more cash on hand than many countries. That is both a floor and a compounding engine for smart investors. So, again, I get it. Volatility can be unsettling, but it's part of the process. The question is what you will do about it. Now, in the written version of the Five with Fitz via email, there's a chart, and I want you to look at it, that highlights the difference between days, months, decades, and years. You've got to figure this stuff out because if you do, I think you're going to be considerably calmer. Anyway, here's my playbook. What I'm planning to buy this week. The Venerable Stuart Varney asked me this morning ahead of today's opening bell, what's driving the market lower and which three companies I'll be buying more of if I get the chance. Not to beat a dead horse here, but you can watch that video on the channel. But do not let the volatility scare you. Holiday shortened weeks are often driven by highly technical trading behind the scenes, no matter what you're seeing in front of the curtains on stage. Now, that's very much the case this morning and what I expect for the balance of the month, which is why it's critical to remember that the markets are the only store on earth where people fear a sale. What's more, volatility is tailor-made for high probability tactics like selling cash secured puts, using low ball orders, and more. So, what I want you to think about is learning to embrace it, even though that may feel uncomfortable or perhaps even downright scary. There is always a path to profits. Number two, Microsoft just handed Uncle Sam 6 billion reasons to pay attention. Now, Microsoft has just offered the U.S. government over $6 billion in savings on cloud and software services through 2026. It's a big deal. Let's review. That's $3.1 billion in savings in year one. The rest is spread over 3 years. That's discounts covering Office 365, Azure Cloud, Dynamics, Sentinel. Millions of federal workers are going to get 1 year of Copilot AI access for free. Agencies must buy through GSA's new OneGov strategy to access the deal, though. Now, a lot of people are going to question this, but my POV is that this is Microsoft doubling down on government as a growth engine. The U.S. spends $80 billion, give or take, on IT every year, and Satya Nadella, CEO of Microsoft, wants a bigger slice of the pie while locking agencies more tightly into the Microsoft ecosystem. Now, the moral of the story is this. Betting against Microsoft is like trusting a double agent in a tux. By the time you realize who's really pulling the string, they've signed the contracts, encrypted the files, and cashed the check. As strange as that sounds, it's not a bad thing for investors. The smart move in a situation like this is to ride shotgun because when Microsoft tightens its grip, profits have a funny way of following along. My investing tip in this situation is most investors mistakenly think the money is in the flashy apps or the technology, but my experience is that I find it's often in the plumbing, which of course everybody uses. Now, if you understand distinctions like this one and how that leads to greater profit potential, good on you. Most investors do not, which is why, of course, I'll be here if you'd like some help along the way or simply a kick in the asteroids to realign your life and your wealth. But that's enough about that. Microsoft, by the way, has returned 86.16% since I brought it to the OBA family's attention versus 52.31% from the S&P 500 over the same time frame. Now, I hope you got this covered because there is still a lot of upside ahead, in my humble opinion. Number 3 today, Pepsi has jumped. Should you? Well, I was really intrigued by this one. Pepsi shares are 4% higher this morning on news that activist investor Elliott Investment Management has taken a position seeing what it calls a rare and historically significant opportunity for a turnaround. Now, I don't disagree, and I pay attention because this is a $4 billion position if the reports are right, not chump change. Now, normally I'd pass in a situation like this, but Elliott has a long history of activism that's worked out well for shareholders in many cases. Now, trade idea is leaps, calls, options to, simply keep the risk down, do it less expensively, but latch on for the ride, or even just a few shares could be interesting. Number 4, Kraft is Buffett's bummer. Kraft Heinz says it's splitting the company in two. Oh, good. Now we can buy highly processed food from 2 companies instead of 1. Yeah. The 2015 mega merger was supposed to create a packaged food powerhouse, but instead the stock's down 60%, demand is weak. Even Buffett has had to write down billions potentially. So now the thinking is that they're going to spin sauces and spreads, meaning Heinz ketchup, Philadelphia mac and cheese, etc., into one company, and groceries like Oscar Mayer Lunchables into another. Now, supposedly this is unlocking value. Now, I get leery every time I hear that because that's Wall Street speak for window dressing and management hoping you're not smart enough to realize the game being played, usually at your expense. Putskis, short or avoid. I don't think this is going to end well, and, case in point, even Buffett's bummed this morning if headlines are any indication. And not for nothing, I think it's interesting that Elliott investment management that I just told you about is going after Pepsi, not Kraft, which means they think the value's elsewhere. And finally, here we go again, a scam alert. It came to my attention this weekend that yet another group of scammers is out there who are impersonating me using Facebook, WhatsApp, and Telegram to lure people into all kinds of fraudulent activity. Now, they, this time around, are apparently calling themselves Dividend and Compound Investor Club or something similar, and they're using my likeness, including AI-adapted text and even voice. The individual in charge calls himself Keith Fletcher, and if you look at their website or their process on Facebook and Meta and all this, what do you know? He looks exactly like me because he's using a stolen picture of me. Now, what's more, there are scammers. These scammers are using a combination of direct messages, texts, and calls to solicit victims for one-on-one mentorship, exclusive tips and updates, crypto trading, and more via WhatsApp and Telegram, none of which are services that we offer. If you have been contacted in this way, it is a scam, even if you have been directed to our real sign-up page. If you are interacting with these slime balls in any way, shape, or form, stop immediately. We do not use WhatsApp or Telegram or Discord. We do not offer one-on-one trading mentorship, crypto trading, copy trading, or trade optimization, whatever the hell that is. We do not offer profit sharing or other similar schemes because they are illegal. We do not recommend specific options trading accounts, and we'll never ask you to fund those things. More importantly, we will never approach you by direct message or text on any social media platform to sell you anything, ever. So, moral of the story is if you have doubts, stop and email us before entering payment information. Do not fund a crypto account under any circumstances using a link or QR code the criminals provide. It is highly likely you will never see your money again. Please share this alert with anyone you know who may be at risk. And thank you in advance for helping protect the real 5 with Fitz and 1 bar ahead families. Bottom line today, and on a much brighter note, always do what Wall Street does, not what it says, because knowing how the game is played is a huge advantage because it means that you can sidestep the chaos and use it to your advantage. Profit potential almost always follows, folks. So, let's make it a great day, and as always, you got this. I promise I will see you again tomorrow. Thanks for watching.